All right, so great question first off here coming out of Scalif. Is that how you say your name? Scalif? I don't know how you say your name, but I love you. So let's just go off historical things for a second. So we're just going to look at basically Bitcoin death crosses. Can I just use this? I guess that'll work. Like, let's look at death crosses on Bitcoin. So here's one right here. That marked a low. Is there a key for this? There's not. I'm just going to click it. All right. Here's another death cross here. You know, that basically marked a low. Um, let's see what else we got here. This one here basically marked a low. It's a couple days ahead, but I mean, we're just going to call that because I mean, what is that? 2-3 days? Where else here? Another one here. This marked a low. And another one here. That marked a low. And now we're coming into one here, so we'll put another one here. So these death crosses here usually mark a low, right? So what this means is this is your 50-day moving average versus your 200-day moving average. I use a 52-day moving average, and the reason why, 7.5 weeks. So it's usually 365 days, right? So if we take 52 weeks, 2 days, it's about 364 days. So it's basically a full year. So that's why I just kind of fixed rate it to 52. And then I just use 200-day moving average because that's just pretty much what everyone uses. And then I use 300 week because that usually marks the low for Bitcoin. So we're going to start with a daily chart here. So that's your 52-day moving average crossing your 200-day SMA. So it's so close to 50-day, it doesn't really change. It's, I mean, it's it's a minor shift in time frame, right? But anyways, these usually mark death crosses. So what happens here is usually when Bitcoin goes into like a cycle end, it'll death cross, right? So let's just go back here. So here's a death cross here from 2018. So this death cross here, we actually forgot to mark it earlier, but let's just do it now. It actually kind of marks a low. So what it does is it usually tries to re-rally and get above that into that 200-day SMA, and it tries to retest it, right? It retests it here, retested it here. It did it. So when it death crossed here, it retested it here. So it's a very common pattern to see it when the bear market starts. It usually tries to squeeze some shorts, and then you kind of get this I guess we're going to call it a resistance level, and then it just kind of drops off, right? Like it's a very common pattern to where it retests that 200-day and drops. So if we go to the weekly here, so with the 50 week, you'll probably see that it's one close below, or sorry, that's two closes below, and that's usually the bear market indicator. The reason I like this 52 is because you usually only need one. So, for example, here, these are your weeks below. It fails to get above it, rejects. That's a rejection. Same thing here. It goes below it, tries to get above it, it rejects. That's your bear market. This whole ride up here, we've rode this up, right? We finally got an official weekly close below. So what happens when these death crosses occur is you usually get this kind of rally that happens usually within a few days, right? So if we go back on our daily time frame here, so let's give it a week. Let's give it a week because I think 7 days is a good time frame. But what happens is you usually get this death cross and you attempt this rally to get back above, right? It usually comes pretty quick. Here you get this death cross, tries to get above. I mean, like this one here is about a week. This one here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, tries to get above. So you can kind of see that if you stay too far below in these death crosses, it actually can be a bear market indicator. This, for example, you're only down below it for 1 or 2 days before you went up. Sorry, not below, but you're at the death cross for 1 or 2 days. Same thing here. You're at the death cross, and it actually rallies above. The problem we have now, and this is complete SMA unrelated, and I think SMAs are great for just a general gauging. I would never say trade off of this, and I mean this for all indices. You don't trade off an SMA, and that's your strategy. We go over to something here like USDT dominance. Coin always has found a you know what? Let's invert this too, just because this will be way easier for everybody to look at. Let's invert it here. There we go. So this is USDT dominance. This is like your number one bottom and top indicator for the market, right? we're at a really weird phase. So this has been your bottom for the whole cycle. Here, 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 here. And we've finally broken out of this channel, which is not a good sign, right? So if we turn on Bitcoin, see, like this is a bottom here. That's a bottom there. That's a bottom here. It's a bottom here. That's a bottom here. And we've kind of, you know, messed this up. You know, the bottom started here, and it's kind of just rode this double regression channel, I guess we can call it, parallel channel, up the whole cycle. You know, it's rejected at this yellow line every time when it's gotten, you know, close to the top or at the top of each of these pumps. The issue with this, and this is why I posted the Fractal of 2019 the other day, is back in 2019, when Bitcoin did this nuke, when it tried to rally up again, it never got to the top of the band here. So you can see, like, the red band here, this marks the cycle top every time. Every time we go to the top of this red band, that's the top. That's the top. Let's go back in history. You know, that was the top there. That was the top there. That was the top there. Every time. And we'd never hit the top this time. But we're pulling back. So we have all this bearish divergence. We've broken the channel that bottoms us this cycle. We've got these death crosses, the 52-week moving average. Like, there's a lot of stuff lining up, as well as SPX and the Nasdaq are showing some divergences. So it's very similar to what happened in 2019, where, you know, you never got these bullish rallies, and you kind of just got close to the top of the line, but you never really got it, right? And we're already late in the cycle. Like quarter four historically has always been the top, and we are there. We're in the post-halving year. You know, we got our post-halving year nuke that we always do. It's always, you know, roughly 1 year post-exact halving that you get this drop, and we got it, but the rally didn't go. It went up, but it basically just created a bearish divergence, right? And what I mean by that is, so you kind of have this bearish rising wedge that you've had this whole cycle. You know, it's kind of just rode this up, and now you've broken out the channel. And I posted this weeks ago, and people were like, "Dude, like, you're retarded." But like, it's gone. Like, and it's not looking good, right? I guess to summarize this all is you're kind of looking to see if you get that retest of the SMA here, right? And just to add confluence to that, let's go over to tensor charts here. So here's the heat maps, and this is why I say that this level is so crucial. So we're going to swap over here to a daily version of these heat maps. There is a shit ton of just overall blockadage above. There's a lot more blockadage above than there is below. And a lot of this is coming in recent days, right? So this is a daily map. So this is showing from just recent days here. These bids are still here. This isn't just like, you know, whatever. Like, this isn't just random rejections. These are piled bids here. Just, I'll clean it up a bit here, but this is basically saying that they don't want price higher. There's some twat below, but there's not much below. And this is on Bitfinex, and this is an exchange I really think you have to pay attention to. And it's the same thing. If we go over to Binance, you know, it's just 100K exactly kind of where those SMAs are crossing at. Like, look at this thick bid here, right? Like, that's on the 5-minute, but let's go to the daily here. And it's the same thing. Like, it's just bids stacked across, bids stacked above, but like, go over to something a little lower time frame to see what's new. You know, it's just bids stacked above. You know, like 98K here is filled. This is just within the last few hours. It's just filled, holding price down, right? And you have to remember, as the days drag on, those SMAs are going to come down. So they're basically coming down into these bids where price is expected to push into, right? So if we take tomorrow and the next day, whatever, let's say that 7-week interval we gave as leeway, as long as these bids are still here, that means that these shorts are asking to be filled there right at the rejection point, which it technically would be. There's a bit of plunge protection here at 90K, but I'd argue that this came in on the weekends here. As we can see on the 13th, that would be what, the Friday? Yeah, or the Thursday, I guess. So that's basically plunge protection to hold price above for now. Right? You know, today we blasted, let's just say we blasted this one yesterday. You know, this here, oh, that just got, oh, wait, did it? Oh, that was weird. Looked like someone removed it and replaced it or something, or maybe they added some more. But you have a little bit of plunge protection just to kind of prop the price up so it doesn't just plunk down that fast as it's already declined rapidly. But you definitely have shorts, you know, across the board here, whether it's on Binance Spot or Bitfinex Spot. But let's also take a look at the perps here. Yeah, look, more perps here just asking to be filled. There's a little bit of plunge protection below. Again, not much. Like, that's it, right? And that's on the perp long side. And then this here is your shorts above again, just looking to be filled all across you. Yeah, see, look, like 98K's got blockage, 100K's got blockage. These have all, since prices have been below all these short bid asks, like that's a thick wall there at 99.5. I guess it's like 100, but that's a thick bid. You know, yellow means like that's a thick bid. That's not going to show us, but that's thick. Like that's not, you know, $100 bids. Like that's multi-million, couple $1,000 bids of BTC looking to be sold. And there's a bit here to be buy, but you can see you're kind of in this compressive range between 90. Yeah, like that's Friday. You're just in this weird range of they want some ask below to fill, and that's probably again just plunge protection. There's a couple here at 91, but there's that big resistance above right where those SMAs are, right? And again, we showed this again, but this is on Bitfinex as well. Bitfinex is actually holding the price below 96 right now. See, these are fresh. This is within 5 minutes. This is within the last few hours here, right? So they're holding it down. And we've seen on the Bitfinex long rates as well, the TWAP rate has been massive, right? So what Bitfinex does here is when price declines or they want price to decline, they start the TWAP to bid their longs, right? So this is the bottom of the cycle, right? They long all the way down, right? Because they're filling that TWAP rate to build their long position. As price moves up, they sell it off, right? We can overlay BTC here. I'll just do candle structure so it's easier for people to understand. You can see here, right? Price was declining, and meanwhile they were bidding. That means they want price to come down to fill their longs, right? That's how that works. That's how a TWAP works, right? You basically average in as the price is going up or down. You can do it when you're taking out profits in your long, taking profits in your short. Doesn't matter. TWAP is basically just a set rate between a certain price range, or you can just set the rate to bid whatever on whatever way it goes down. Depending on what exchange you use, there's a lot of settings, but basically your TWAP is your average DCA in for your long and short positions, in or out. You can see they're just, you know, let's go here. So yeah, when again 2019 price going down, TWAP is going up. Price is going up, TWAP is going down. Price is going up. Price is going down, TWAP was going up. This is the only exception I think for 2019 where it was backwards. They actually sold a lot of this down, but I think that was when COVID happened, if I'm not mistaken, right? Like that's COVID. So they probably all sold off like, oh fuck, we're just gonna nuke it to the bear market and try again. But you can see, you know, they started bidding up, and then basically when price broke out, again, they're taking profits, taking profits. Okay, we're getting close to a top. Let's start the TWAP rate up again. The price declines down, their TWAP rate goes up, Price peaks, they bottom, they sell off again. Then they start building the TWAP again. TWAP goes up, TWAP goes up, TWAP goes up. When this goes sideways, that's how you know you're close to a bottom. And this happens every time, right? Like look here, like when you're close to bottom here, price is kind of just sideways in their TWAP. Same thing here. Sell on the rally, TWAP in this whole consolidation. Long rate goes up. Look at that TWAP. You can see it. Look at this. Just look. Remember when we got that huge consolidation in 2024? The whole time they were TWAPing. Whole time. Go sideways. That's how you know the bottom's in. It goes up. Sell near peak. Start TWAPing in again. When price comes down, that's how you knew the bottom was in. There's a lot of indicators showing the bottom was in. It goes sideways. TWAP out on the price rising. Start TWAPing in when they want the decline. So there's a lot of confluence here that we are entering a very frothy space. So I'm going to show you now why I think this cycle is literally like 2019. So this is the 2019 fractal I was going to show you guys. So let's just go from the bottom to, I don't know, right there. That's fine. But if we overlay that to the current cycle, right? Like, Like this is really bothersome to me, and this is this is why I'm like, all right, if we get the bear, we get the bear, right? So remember, it is a fractal, so it's not going to line up perfectly, but I want to show you patternistically how this has worked. Here's your drop. Here's your weird, like, consolidation period, right? Like that weird consolidation period kind of right here, right? This lift up here, this is that, right? Like that's that. And then this whole consolidation zone here is right here at halving of 2024. You get your rally up before you drop again. Like that rally here is right here. Then it drops, which is this is your bottom, right? Like this here is your bottom. And then it kind of just round up and did this double top overhang before nuking. And that's literally what you've gotten now, right? Like if that does not look similar to you, I don't know what does. And it makes sense. I mean, Trump was in office then. He's in office now. Republican and Democratic markets historically do perform differently. Democratic markets usually perform better. And listen, that's not even a political thing. I just want to say this. I don't care what side you are. That's stock market history fact there. If you go compare the two, Democratic markets usually always perform better. And I would argue some of that's because fraud and crime is a little bit more lenient in terms of lawmaking and punishment. You know, it's easier to just kind of manipulate those things. Maybe the economy is better. It doesn't really matter. Again, I'm not trying to get political. I don't care if you're pro-Trump, pro-Kamala, pro-Biden, Obama. I do not fucking care. I'm not American. I do not care. I don't want to hear it. I think people are too fixated on that stuff. But I'm just saying that the similarities are there, right? So if we really do just get this nuke here, it's a 2019 fractal. But that means that, and this is why I think a lot of people are calling for 2030 rally and whatnot, and they have this crazy, you know, 500 plus or 500k plus BTC, maybe a million. You get this nuke, right? You get your kind of double bottom scenario, and but then your cycle, your return is, you know, let's go from here to here. That's a 1700% return rate, right? So if we were to somehow get this bottom scenario, like let's go 1700% here. You know, if we got that nuke, then yeah, we'd be, you know, 300k BTC or whatever in the next, you know, I don't know what, 2 years. I guess it'd be 3 because it'd probably be, oh no, it'd be 2027, wouldn't it? Because 2020 was the yeah, so 2019 was 1 year before the 2020 halving. Is that right? That's right. Yeah, so you'd get some kind of crazy upswing. You know, if we look at it from a regression standpoint, you know, 2019 again, that was the one cycle where, you know, you never really got that euphoric upswing to the upside. You know, it checked in with the bottom, but it never got to the top of the red. You know, and every cycle historically, it's kind of done that, where it's gone green to red just fine. But 2019 again was the only cycle it didn't do that. So maybe you only get the nuke to 86k because it's hard to say. It's really hard to say. If for some reason 2017, nah, but no, because it was 2017 at the red line. I don't know. This is hard to say. Now I'm feeling like I'm doing a Ben Cowan video. But if we only got halfway up here, and again, we kind of only got halfway up above the blue line, then yeah, we'd probably just come back down and test somewhere around 50k. You know, maybe if they let it extend out, it would be 69k. Because historically, Bitcoin's always bottomed off the top of the previous high, right? Like this high, like that bottom there, that's roughly the previous cycle. You know, this here is, you know, roughly the previous cycle. It's kind of hard to go back. You can kind of just see, like it usually, like here, this would be this bottom. Let's see, yeah, like the bottom would be there. This bottom would be here. This bottom, oh yeah, we already did that one. You know, when it bottomed here off the post having your drop, all it did was bottom off the previous high. right? It's really hard to say what it's going to do. But the problem is we're seeing the pullback indicators and we're not seeing the bids, right? You know, and again, we know this from metrics. Retail interest never returned. You know, alts never went to 0.25, right? Like this is your altcoins. Never went to 0.25. We're not there yet. There's no alt season yet. You need to get down here. Yeah, like there's just, I mean, Bitcoin dominance has done great, but again, like that's your alt season. You know, that's your alt season. That's your alt season, right? It's just there's not like it looks more bearish than it does bullish. But I do think, and I do mean this, I do think it makes a strong comeback when the bottom's in and the time is right. But it's very 2019 like. That's just my views. I'll put it up on the screen one more time. Yeah. Where are we here? Wrong chart. You know, you got your death cross. Yeah, like everything looks divergent for the most part. There's no love anywhere. We're gonna turn off the SMAs here. Oh, I'll show you this quick. Is this the 20? Yes, this is the 21 week, okay? Whenever that 21 week is crossed the 50, that's your bear. That's your bear. That's your bear. That's your bear. So you know you're in the bear market when this 21 is going to cross 50. And if we look, you know, it's probably going to be a little bit more like this. That would be in February. That's late January. And historically speaking here, when that 200 week crosses the previous all-time high, that is your bear officially. That is your top is in signal. Last cycle it came early. Or sorry, last cycle it came late. And that's probably because of the whole COVID financial shit. But I mean, you only got what 55 to 60, 69. I mean, that's roughly January that would hit, right? Let's see here. That was to go here. Yeah, it's roughly January, roughly February, and that's kind of where those SMAs look like they wanted to cross.